Hi, and welcome to the Market Minutes for April 10th, 2017. This week we're going to talk about avoiding bias, look at the charts as we always do, and then the trade of the week on AKRX. All right, so avoiding bias. Very simply, we humans cannot be trusted. Our emotions cause us to interpret what we see with a bias. We see what we want to see. We let our fear creep into the equation. Perhaps our greed plays a role in how we judge the information that is in front of us. Our decisions should not be based on emotion, but instead, of course, on fact. By applying trading strategies with rules based on data rather than our interpretation that is collected with an established process, we can take out a lot of the bias in our decision making. If the numbers say take the trade, take it. Don't listen to your heart. And the trade of the week will highlight that point. All right, let's get into the analysis first. Here is the 30-day, 2-hour chart of the S&P 500. And you can see that generally speaking, we are in a little pullback there. We've had a bit of a resurgence up to the trend line. We got oversold here, came back up to the trend line, got stuck at it, and then we rolled over again this week, and we're back to just trending just underneath the trend line. What we need to do is break through here. Until we do that, I want you to be relatively bearish short term, although it's not too bad because we're generally going sideways here, so you could call it neutral as well. On the long-term chart, we are at the point where the market should bounce. If I drew a little trend line like this on this weekly chart, you can see that we're just holding that, call it medium-term trend line. The longer-term trend line, again, this is a 3-year weekly chart, we are quite a distance above it. So if we break this line, so in other words, if we get some weakness in the next week or two and break down through here, then that's probably where we're headed, is to that longer term upward trend line. Now, keep in mind that earnings season starts next week for the first quarter. And so that should bring some new excitement to the market. If earnings fall short, that would be the cause for a breakdown through here. If earnings are good or at least at expectations, we should bounce off of the trend line and continue higher. I don't know what's going to happen. You don't know what's going to happen. Let's just trust the chart to tell us what to do. On the Russell 2000, and again, this is a daily chart, we've really seen an underperformance of the small caps. And that's the case we could make for the last 10 years pretty much. Small caps haven't done as well as the large caps, and here they're lagging. We have falling tops, which is the pullback that the S&P saw, but it's not as sharp because this market didn't go up as much. We are at support, and so we should hold that, but that is what's called a descending triangle, and if we break down through support here, then we're headed for lower prices. So some caution is warranted with the IWM, the small cap stocks, until we can break that cycle of falling tops on the daily chart. Canadian market has actually been moving up fairly nicely over the last few weeks, largely because of strength in oil. We'll see that in a moment. We are pulling back for the last 3 days perhaps, and we should bounce off of that and continue higher. Longer term trend is still up, and so I remain bullish on the Canadian market. Short term, it's kind of gyrating around, but it does look to me like it's breaking this little pullback mode with the strength of the last 2 weeks that we saw on the intraday chart just a moment ago, and that should take us into higher prices near term. On the TSX Venture, a little bit of strength, fairly shallow upward trend, still under this resistance here. I would say this is a very exciting chart. There will be pockets of strength on this market. As I always say, this is an alpha market where individual stocks can do well, and the overall market in the microcap Canadian stocks is not hurting anything. So individual companies can do well, but they're not being really helped by the overall market either. On the TLT, which of course is 20-year treasuries, we saw a little bit of an attempt at a breakout here, and it failed. We came back and closed down for the week, down for the day on Friday, and we're just stuck in this narrow range here. And so until we can make a breakout, which would mean if this breaks out, that would mean lower interest rates, or until we break down and roll over and start heading towards this support, it's a market that's difficult to call. It's stuck in a sideways range, and just leave it at that. US dollar has had some strength in the last couple of weeks, still below this downward trend line, so it hasn't broken the pullback that's been underway for 1 to 3 months. And until it can break that downward trend line, I wouldn't get too excited about the US dollar, but it is at least holding support. And, ultimately, I think it'll take a few weeks, but ultimately it could break that pullback mode and head higher. On the gold chart, of course, we had a little bit of a break to the upside on the open after the U.S. bombed Syria in the futures market, in the extended hours market. Gold was up quite a bit, but it failed to break out. We had this resistance that has been defined here. It tried to break out in the morning, failed, came back below the trend line. Now, to its credit, it does have rising bottoms on this chart, so there is optimism building, but it needs to break that long-term downward trend line, which goes something like this. We're close to it, not quite there. I didn't draw that quite as well as I could. We are very close to that downward trend line, but until we get a solid break moving up through 122, I want you to remain long-term bearish, short-term, some optimism building, so there is some potential there, but it's not quite there yet. And on the oil market, usually I chart the weekly chart of oil, and it shows the market in a very narrow range. When you break it into the daily, you actually see there is some price movement. It's fairly tight. We have good support that's drawn there that didn't quite touch support this time, but we also have strong resistance at the top of that zone. And so we are working our way back up to the top of that zone, and I think we probably will get there into this range somewhere in there. So we've got some more upside. I wouldn't say the risk reward of entry here is great, because if you're entering here and your risk is down to support, and you're entering here with your reward potential up to resistance, it's not that good of a relationship. That's the point that I'm trying to make. So if you own oil stocks, I would stay long of them, but they don't, the underlying asset oil doesn't have huge upside in the short term, but it does have positive momentum in the short term. And on the fear chart, I've actually got the daily chart this week. There's been a little bit of a pickup in fear in the last little while, but more than anything, we're just seeing a little more volatility in fear. Went from a very narrow trading range, kind of like this, and we're starting to see a little bit of fear percolating, but it can't gather any momentum. And so I think the market is still relatively complacent, but maybe a little bit on edge. And that tells us something. We should be a little bit more cautious because of that. So my ratings then: US stocks bullish long-term, neutral short-term. Canadian stocks bullish on both time frames. Gold bearish in the long term, but getting close to that long-term downward trend line break, and neutral short-term. Oil neutral long-term. It's been in that sideways range for some time. Short-term, it is bullish. It's got some positive momentum, but it is going to get stuck at resistance. US stocks continue to be in a pullback in the short term, but are approaching a break of the pullback trend line. Canadian stocks are stronger as oil surges. While oil is strong in the short term, it is still stuck in a long-term sideways range. Gold struggling with resistance at that long-term downward trend line. Fear is low, but the volatility in fear is increasing. All right, let's get into the trade of the week. And this is one where my bias played a role. This is a trade that I did not take. This is a stock that I had on my watch list on Friday. And one of the things I do with my watch list is I score them. I score them out of 4. And I give them points for, breaks through certain areas, resistance, abnormal volume, is it the first day of the run, that sort of thing. This one, mathematically, was trading abnormal volume in the early part of the day. It really picked up abnormal volume later in the day, but in the first part of the day, it was actually abnormal as well. But because Thursday was also an abnormal day, my bias was, perhaps it's fear, was like, well, I don't know if I want to buy a stock on the second day of the run. And yet the volume, the indicator that I used, told me that it was okay. Despite that, I did not give it the score that I should have, and I missed out on this trade. This stock entry signal on my strategy was right there, and it rallied for a big move, better than 11-to-1 RR. You can see the rating there in terms of reward for risk. And there's a little bit of luck involved in this one. A rumor hit the market that this stock was being considered as a buyout candidate by another company. That's what caused that spike in volume right there. But the market was predicting that with the abnormal activity early in the day and also on Thursday. So there was a rumor out there, and then the rumor gathered some real momentum right here when we saw the volume spike, and it really rocked to the upside. My point in all this is I didn't take the trade because of my bias, my fear that on the second day of a run it was risky, and in fact it met all my criteria and should have been bought. So lesson learned. I make those kind of mistakes all the time. but that was the point of this week's Market Minutes, is to not let your bias creep into the decision making. All right, well, hope that you've enjoyed this week's video. Please subscribe to the channel, like the video, leave your comments, and have a great week in the market. Trade well.